Lorenzo, a lot of people say the ECB is totally behind the curve, following the Fed, and whatever in terms of extraordinary measures is put in should have maybe been put in quite a few quarters ago. Would you agree?
Well, there are many factors. Monetary policy is doing a lot in Europe. If you look at structural reforms, they're not really happening. If I look at Italy, at France, this is lagging behind. The budgetary adjustment, there's a lot of discussion about easing. So, you shouldn't look at monetary policy by itself. You have to look at it with the other policies. And, I think now that if there is more emphasis also on structural reforms, I think monetary policy will help.
Help to have the European economies finally start to pick up. At the moment, we have no inflation. We don't want to call it deflation, so the new buzzword is lowflation, whatever that means. But tell me, how quickly will these extraordinary measures really have an effect on the underlying economic pickup?
Well, I think the first impact that QE would have, for instance, is to weaken the euro, a bit like in Japan. And that would help by, of course, making exports more competitive. It would increase a bit import prices. And it would reduce interest rates. So these are, favorable effects. Of course, it will take time, but the impact on the market will be immediate, and the risk on peripheral assets would come down. So more stability in the euro, and of course, if you look at the real economy, this will take a few years, but the recovery we know is going to be gradual because there is a deleveraging process which is taking place, has to continue on the public sector and on the private sector. So we shouldn't expect very high rates of growth in Europe, and that's a problem because with low rates of growth, unemployment will not come down very quickly.